Hi, welcome back to the channel. In this episode, I want to talk to you about what's happening in the Russian economy and specifically to talk about the National Wealth Fund and Russia's debt. Now, if you've been following the channel, you'll know that over the past 4 years since Russia started the war in Ukraine, we've seen the National Wealth Fund going down as a result of the fact that Russia is continuing to spend more than it's earning. It's increased its expenditure on the war in Ukraine, but unfortunately, it's seen a reduction in oil and gas revenues, which are the two main drivers of revenue in the Russian economy. And in this video, I want to share with you some really interesting data, which shows that the National Wealth Fund now looks like it's been depleted, and Russia is now having to turn to debt. If we have a look at this chart, it shows government bond placings in Russia and the use of National Wealth Fund funds for the budget deficit. So the black columns are the bond placements each year. So if we have a look at that first, you can see that in 2020, the bond placements were sitting at around about 5 trillion rubles. 2021, that came down to around about 2.5 trillion. We saw an increase in 2022, followed by a slight decrease in 23. But if you look at what's happened in 2024 and 2025, there has been a large increase in the number of government bond placements. Now, historically, Russia hasn't used a lot of debt. It has a relatively low debt to GDP ratio compared to most economies around the world. And the reason for that is because Russia is a net exporter. It makes more money from selling all of its exports, predominantly oil and gas, than it does for paying for all of its imports. So it didn't need to borrow any money because it's got all of the natural resources that it's been selling all across the world. But as you can see in 2024 and 2025, there has been a sharp increase in the amount of bonds being issued. And in 2025, the figure was almost three times what it was in 2023. So Russia is now turning to debt. And one of the reasons for that is because the National Wealth Fund has run out. So if you look at these blue columns, it shows the amount of money being used from the National Wealth Fund to fund the difference between Russia's spending and its income. So in 2020 and 2021, there was virtually nothing used from the National Wealth Fund for those purposes because Russia had a surplus. It was actually making more money than it was spending. But as soon as the war in Ukraine started, that situation changed. It started running a deficit. So you can see that in 2022, Russia used over 2 trillion rubles from the National Wealth Fund. In 2023, that increased to 3 trillion. Now in 2024, it fell to around 1 trillion. And in 2025, it's gone back to virtually nothing. And that might look a bit strange, but if we look at what's been happening with the National Wealth Fund, this chart shows the value of the liquid assets, so basically the cash and cash equivalents in the National Wealth Fund, dating back to the start of 2021. So before the war in Ukraine started, Russia had around about 9 trillion rubles worth of cash in there. And you can see that over the past 4 years, there has been a significant reduction in the National Wealth Fund right through to the middle of 2025, when it looked like it was going down to zero. However, what's happened over the past few months is that Russia looks like it's decided that it needs to keep a base level of liquid assets in the National Wealth Fund to cover other things rather than the funding of the war in Ukraine. So if we jump back to this chart, what it's doing now is funding the deficit with debt. So Russia is now starting to lean into the debt markets, issuing bonds, which is basically reducing the amount of cash that it's going to have available even more because it's going to have to service that debt. And this is one of the big problems from Russia's point of view. If you have a look at this chart, it shows the yield on Russia's 10-year bonds over the past 10 years. And the yield is basically the interest coupon. So it's slightly different with bonds. It's not quite the same as a loan. If you take a loan out from the bank and they're charging you 5% interest, then you just pay 5% for the whole time. With a bond, it's issued by the government at, let's say, 100 rubles here. And the coupon on that bond will be fixed for the 10 years. But the coupon that it pays upon issuance of a new bond, which is usually to repay the old bonds, depends on what the current bond yields are. So you can see that back 10 years ago, the bond yields in Russia were sitting at around about 10%. And interestingly, as we went through the COVID pandemic, that came down to about 6%. So that would have been a good time to issue bonds. But if we jump back to that chart, you can see that in those days, it wasn't issuing a lot of debt. Now, if we look at what's happened to the yield since the start of the war in Ukraine, you can see that it's risen from around 8% to the current level of over 14.5%. So, what that means is that all of the new bonds that Russia is issuing are being issued with a coupon of around about 14.5%, which is significantly more than the historic level that Russia was paying. And if we go back to the bond chart, what we've got here is a combination of an increase in the amount of debt and then a disproportionate increase in the cost of that debt because it's now much more expensive to issue debt for Russia than it was over the past 10 years. It's pretty much the highest point right now. So, this isn't the time that you want to be issuing debt. If you've been following the channel, you'll know that interest rates in Russia are currently sitting around 16%. So, you don't want to borrow money at those sort of levels. The government is able to issue its bonds at below that 16% level, but not that much below. But at 14.5%, that represents around 3 times the amount that countries like the USA and the UK are paying on their bonds. And they see their current bond yields as being extremely high. They're higher than they've paid at any point in the last 10 years. So this isn't a good time to suddenly decide that you want to start issuing lots of debt. But that's what Russia is doing. If we have a look at this chart, it shows the change in military spending and the change in the debt service costs for Russia dating back to 2020. So the black column here shows the change in military spending. So just to be clear here, the scale on the right-hand side is a percentage that goes from 0 to 60%. And we're looking at the year-on-year change. These aren't the total amounts. It's the how much it's changed per year. So you can see that between 2020 and 2024, there was a consistent increase in the change in military spending. So in 2021, it went up by around about 10%. In 2022, it was up by around 30%. By 23, it was up by 35%. In 2024, the year-on-year change was up by around 60%. And when you add together these percentage increases, we have seen a huge increase in the level of military spending in Russia, obviously as a result of the war in Ukraine. Now, over the next few years, in 2025, the increase fell back down to around 30%. But as I said, this is the percentage increase from the previous year. So that 30% increase is on top of the 60% increase the previous year, and then the 30% or 35% increase in 2025. So we've got year-on-year increases. So even though it looks like it's gone down in 25, the military spending has continued to go up because this is just showing the percentage change. Now, in 2026, it's forecast that the military spending will reduce slightly by maybe 3 or 4%, but then it will go up again in 27 and down again in 28. So overall, it's probably about the same level as 2025 over the next 3 years. And if we look at the change in debt service cost, you can see that in every single one of the years between 2020 and 2026, there has been an increase in debt service costs. And as I just said, these increases are cumulative. It's year on year increases. So in 2024, we saw the debt service cost increase by 50% in Russia. And that was on top of the increases seen in 2020, 2021. There was an increase of almost 40%, 22, 30%, 23, around 7%. So we have got a massive increase in borrowing costs here, and it's forecast in 25 to be up by 40%, 26 by around 25%. There's projected to be a reduction in 27, but I don't think that looks very realistic. And then in 2028, it's going to increase by 20%. And the reason why it's increasing year on year at these levels is because Russia is increasing the amount that it's borrowing as well as the cost is going up. Now, interestingly, if we look at the budget that Russia has issued for 2026, It assumes that the Urals oil price will be $59 throughout the whole year. Now, if you've been following the channel, you'll know that currently Russia is having to sell its oil at $35 because of the increase in the sanctions and the fact that India and China are now turning their back, and also Turkey turning their back on Russian oil. They're having to offer bigger and bigger discounts to encourage people to take the risk of being hit with secondary sanctions. So, realistically, they're not going to come in anywhere near $59, which is what has been budgeted for 2026. And in addition to that, they've also assumed an exchange rate for the ruble of 92 rubles for $1. Now, currently, that's sitting at around 80. So, unless we see a severe weakening in the ruble, that's also going to cause problems because Russian companies have to convert all of their revenue back into rubles before they can declare their accounts. And that will mean that they're showing lower levels of income as the ruble stays stronger than the budgeted level. So we potentially could see the deficit between the amount of spending and the amount of income increasing significantly over 2026. And what that will do will mean that Russia needs to issue more debt at these higher levels, which is therefore going to increase the cost of borrowing even further, widen the gap in the budget deficit. And this really becomes a vicious circle. You'll know yourself if you know anybody that's got debt. If you're constantly taking on more debt and paying higher rates for it, because credit card debts, for example, then it becomes a nightmare because all of your money goes on to servicing the debt. And that's potentially what's going to start happening for Russia. Now, as I said, Russia's got relatively low levels of debt to GDP. So they're not at the same crisis levels as some other countries. But what they have got is a massive deficit in their budget. They spend more than they earn. And every ruble of debt that they take on at the moment is increasing that debt burden, increasing the cost of financing that debt, and therefore will increase the deficit further. And so that means they'll have to borrow more money again. And it's interesting that it's just been approved in Russia. Up until now, they weren't allowed to have a debt to GDP ratio above 20%, but they've now just approved it to be going up to 70% by 2042. So Russia is now expecting to start borrowing more and more. Now, the big question is who's going to buy those bonds? Now, we've talked about this before. Russia is currently looking to issue bonds in Chinese yuan. And the reason why they want to do that is because they want to encourage investors from China to actually buy those bonds. But the big question will be, do they want to do it? Do Chinese investors want to put money into the Russian economy given what's happening? Because the Russian economy is still dependent on oil and gas. If it continues to be hit with these sanctions and it struggles to be able to sell oil and gas, then you wouldn't really want to invest into that economy because fundamentally it looks flawed. Its single biggest asset is now becoming its single biggest problem in terms of how can it persuade anybody to buy it if all of the sanctions mean that as soon as you make that purchase, you yourself are sanctioned. So this is a really big issue from Russia's point of view. They may want to issue more and more debt, but who's going to buy it? And what's going to happen if nobody buys it? Well, the Russian state will just basically have to just be self-funding itself. It becomes a little bit like what we're seeing in China, where it's a little bit smoke and mirrors and it's a bit of a black hole in terms of where does the money come from? Where's the debt? Who's going to pay all of this debt back if Russia's borrowing the money from itself? So I wanted to make this video really just to put you in the picture, to talk about the fact that the National Wealth Fund now looks like it's been depleted in terms of using it to fund the deficit. Russia's now turned to debt instead because National Wealth Fund, there's nothing left there. It's got basically down to its lowest level. And as Russia takes on more debt, it's becoming more expensive, which means more of its money will be going on paying that debt. Less of it will be available to fund the war in Ukraine. And at some point, Russia will run out of cash. I said in a recent video, one of the things that's saving Russia at the moment is that they've got large reserves of gold and they have been selling that gold. And the longer the war goes on and the longer this situation persists, where they're spending more than they're earning and they can't make money from oil and gas, it means they have to sell more of that gold, basically selling the crown jewels of the Russian economy, and that will weaken Russia over the long term. So hopefully you've enjoyed today's video, you found it useful, informative, and thought-provoking. If you have liked what I've said, then please give me a thumbs up. Please subscribe to the channel if you haven't done so already. It really helps me with the algorithm.